We have with us, of course, the CEO of TCS, N Chandrasekaran. Chandra, a decent start to the year?
Yeah, a decent start to the year. I think the volume growth has been positive and all the core verticals have done well. But there has been some softness in the emerging markets especially.
Sure. Was this the start that you anticipated?
I think by and large I'm quite happy with the way the quarter has panned out. But definitely I think the softness in the emerging markets was unanticipated.
Is that what would explain why this quarter, this first quarter of this financial year, is not as good as the first quarter of the previous financial year or even Q1 FY14?
Yeah, I think if you see the metrics, most of the metrics, all the key metrics in terms of the industries and US, BFS, retail are all, I would say, exemplary. I would say it's very, very good. But the disappointment in the emerging markets has caused tad lesser than expected growth.
Is it recoverable? Because I'm just wondering, will you have to run much harder in Q2 if you want to maintain your 15% growth rate for this year?
We will see. But I think overall...
a weaker, I mean, in comparison to Q1 of last fiscal and the fiscal before that, this is weaker. You know, it's at 3.5%.
On the top line number basis, if you look at the 3.5%, it's weaker. But if you look at the strength of the verticals, I would say it's not weaker.
Well, 3.5% versus 5.45% versus 4.1%. I'm just wondering if you have to run harder in Q2 to make up and maintain FY15's growth rate of 15%.
You are saying that, I'm not saying
that. No, I'm asking you if you have to run harder.
No, I think you should look at the constant currency. I think the gap is not that much. Constant currency on a year-on-year basis, we have delivered 16%. If you look at
3.5 versus 4.8 versus 4.8.
If you see the year-on-year, it's 16% on CC terms. So CC terms we have done well, definitely. There's no question about it. But the fact that the CC in the Q1 on a sequential basis is 3.5 is primarily due to the softness in the emerging markets. But I think it's okay.
Okay, you've explained, and I'll get to the softness in the emerging markets and really what is the duration that this will sort of persist. But before that, I want to come back to the question on, can you make up for this softness in Q2? Because like the focus almost always is, are you going to beat the previous year's growth rate? Now, I'm not going to ask you that question because I know you won't answer it, but are you going to be able to make up in Q2?
See, as I said, we don't give guidance.
I'm not asking.
And I will stay away from saying, make up what? There is no making up of anything. So I think the way to look at it is that the momentum is very strong. Deals have been pretty strong across industries and across geographies, and the key markets and key verticals are pretty robust, and digital revenues are very strong, both on a sequential growth basis and also on the size of the pie we have and the pipeline that we see. So I think to me it is all about doing the right things to capture that growth. Whether it leads to a certain number that people expect or not, I think I'm going to leave it.
Okay.
I'm not going to get into that.
Has, the dollar revenue has missed estimates for 4 quarters now. You're a company, it seems, in transition. Either we're getting it wrong, and I mean by that analysts, either they're getting it wrong, or there's something going wrong in terms of the execution. I ask you this because for 4 quarters you have missed estimates. Someone is getting it wrong in this process. If we're getting it wrong, please explain to us how we should relook at TCS from here on.
No, I think the way to look at it is that it's not guidance, it's estimates, first of all.
Yeah, I'm talking about street estimates. I'm not talking about what you put out. I'm saying you've been missing street estimates.
Yeah,
so clearly expectations are running ahead of performance.
That's fine.
Why is that? Because
see, I can't explain that. At the end of the day, on a base of 4 billion, missing somebody's estimates by $15-20 million can happen.
Sure.
And I'm not going to be able to explain that, why it happens, why it doesn't happen. But that's the way it is.
No, so the reason why I'm asking you this question is to try and understand if the way we've read TCS in all the years so far needs to change and calibrate to the reorientation that's going on at TCS itself, which is the focus towards the digital economy. And therefore, all the incumbent changes that reorientation brings, are we able to factor that into our expectations? I'm asking you to judge us.
No, I'm not going to do that. See, because I'll tell you why. See, we make bets. At various points in time, we make big bets. Okay, for example, Japan is a big bet. And Japan should fire, but it will take time. And whether during that period there will be volatility, and it's very difficult for me to guide anybody towards that, leave alone me judging it. It's not fair for me to tell somebody that this is the way you should estimate. All I am pointing out to the extent possible is that I am seeing volatility here. I explained why I see volatility in telecom, because our telecom footprint is pretty global. So we are seeing volatility, and we are seeing volatility in emerging markets. So in India, I've always said there is a volatility. Still, we are not out of it. Okay, though it has done well last quarter, and this quarter also is a pretty decent performance. Still, I'm not able to say that there won't be any volatility. To that extent, that volatility has to be factored in. So sometimes it can be a positive surprise, but it has so happened that 4 quarters in a row it has been a negative surprise for the market.
Okay, well, I'd love to ask you if that's going to change, but I know you won't answer me. We'll talk about the volatile.
I hope it does.
We hope it does. We hope for your sake it does as well. But you spoke of volatile factors. Last quarter, you identified 3 key headwinds, right? So telecom, the energy business, and Diligenta, which is, continue to be weak. And you warned us right then and there that it could take all of maybe FY16 for Diligenta to come back to par performance, so to speak. This quarter, we've added LATAM to it. We've seen some weakness there. You've mentioned Japan. The consulting business has been stubbornly lower. I mean, that is a high margin business. We were hoping that TCS would build that business out, aggressively, but it hasn't done, I think, as per expectations. So, manufacturing slightly weaker than anticipated. So, have we added to the list of headwinds?
No, actually, I think you should look at it from 2 different buckets. One is a bucket which is weakness, another one is volatile. So, the weakness bucket is only 2. One is Diligenta and energy.
Diligenta and energy.
And energy.
And both are going to take the better part of this fiscal to resolve, right?
Correct.
Okay.
Correct. And the volatility means that, you'll see spikes.
Okay.
That's the point I made. I made that, in telecom, what I said was it is volatile suddenly. If it dips and if it has a spike, let's not extrapolate it. That's the only point I was making. So net it should be okay, but it's on a Q&Q basis we see volatility.
So Japan is in the volatile bucket?
Yeah, volatile. Japan.
So it could very well look much better next quarter.
It could.
It will. It could.
It could.
It could.
So we don't know. Yeah.
Okay, but wouldn't you have already some sort of visibility into the next quarter? So is Japan going to improve next quarter?
I think the point that I would like to say as far as Japan is concerned, it's an excellent market. We've got a very good partner, but then we've got all these clients and we need to, due to the acquisition, so we need to integrate both the Japanese workforce and the TCS workforce and all the TCS India workforce, and the TCS capabilities have to be brought to all these clients, and that takes time because of the nature of the market.
Okay.
And that's why I feel that one quarter, 2 quarters, 3 quarters is a very short window when you look at a market like Japan. So Japan is a long-term bet, and it will take time. During that period, it could be volatile. The good thing is that there's a lot of potential.
Okay.
But I'm not going to be able to predict. For example, if I have 10 key clients in North America or in Europe, where I'm already serving, I've got a very strong predictability with those. But in Japan, I think it's going to take time.
And a quick explanation for Latin America. I don't want to spend too much time because these are not very big contributors to your business.
So Latin America is like India. Latin America is like India.
Okay, so the same reasons will apply, is it? Volatility bucket, not weakness bucket, as you put it. So next quarter could very well be better.
Yeah, markets are good. We have got a lot of key clients in Latin America. So we expect that we will, over a period of time, will stabilize and grow very predictably without any volatility. Till such time there will be some volatility.
Okay. The share of consulting to your revenue, I think, has been somewhere around 3% for a really, really long time. This quarter gone by, we in fact saw a decline. It's a business that is a higher margin business. That's the conventional understanding of it. And yet we have
never a higher margin business.
No?
It is a higher realization business.
Higher
not a higher
realization
margin
business.
Yeah.
All right. Okay. It's a higher realization business. You know, and yet for some reason you haven't been able to grow it out to the strength that you would like to. Why is that?
No, I think I won't read much into that, because some of the way we are structured, some of the consulting work will go into other buckets as well. So pure play consulting will go into consulting. Sometimes which is part of, let's say we do a large digital engagement and then the digital teams from a particular vertical gets involved, that part of consulting will go into that as part of that engagement. You can't really split it out. So pure play consulting will go into the consulting bucket.
Okay.
So there is a volatility there, because all of consulting is discretionary. None of that is annuity.